Maximus Analysis here for August 19th, 2016, and we continue to see we're looking at the E-mini futures contract. Just so anybody that's new to the channel, this little area right here is to the upper left is going to give you what instrument we're looking at and also what time frame. So the W is for weekly. So again, this is if you're scrolling through or want to kind of look back and forth, you kind of know what time frame we're looking at. Anyway, we have had nothing for the last 3 weeks. Again, the high of July 25th was 2170 and a half, or 2172 and a half, and we haven't made 10 S&P points since then, and that's 4 weeks gone. So it's been a painful 4 weeks, but guarantee you that patience will pay. Now is not the time to be adding any longs right now. A little blip in the radar takes these out. Again, I will actually have some really good longs actually setting up in the utility sector, and I'll have those on the newsletter this weekend. If you don't have the newsletter, please email me at maximusanalysis@gmail.com and I will get it forwarded to you, and also give you access to a folder that's going to have the archived newsletter information in it so that you can get this resource. Anyway, we have a big resistance at 2186, 2184 level. Again, they popped up a little bit above it. I think they got to 2092 and then fell flat. So we're looking at these areas here for the pullback. Again, that would take us right to the previous highs, and we should be good to go. I would say we're going to look in the range of 2100 to 2150. Okay, I'm actually going to try to get another angle trend line up here to kind of really look and say, okay, if we kiss this level, we can really look and see what's going on. But we see our long-term bull market trend line has been holding, and until they break below it and close below it, we will not be looking to say that this is a bear market. But timing, again, is a critical thing that a lot of people won't talk about. You could be bullish, but it's to say, all right, are you bullish? You know, you could just get chopped up, or you could be bullish back here and you take a painful retracement. That's not what I'm looking to do. So again, I'm preparing for the retracements, which I think is coming, and based on the price action and the volume, is kind of, we kind of know this going as well. So looking at that, looking at the NQ, again, it's still closing their highs, but again, just to pull back into that previous area will give us a nice entry to the long side for additional highs. YM is still stuck around the 18,500 level, and to pull back into 18,750 area is still a good viable long, just basing on previous resistance levels that we've had this, since 2015. We've been looking at this end of 2015. So crude still is giving a great signal. Again, this is what we've had. We've been talking about the inverse head and shoulders. Again, a lot of people now will start talking about it, and they'll say a lot of stuff in regards to, this is the neckline or whatever. I don't really want to look at that. I'm just saying this is a false break reversal, and now you have the retest, and now it's looking good. Again, you now can roll your stop. If you took this trade, you would get in around 42. That's about $6. $6 is not to sneeze at per contract. That's $6,000 per contract, and you can lock in your profit by rolling up to 46, 47, or you could roll up to like 43.12 if you really want to give it some space. I wouldn't give it that much space, but the upward targets are still 50 to 53, and then again we'll look and see where we can go from there. Again, 53 puts it here, and again I will give it about $11 move, which would be a great, and you could continue, and then we'll look for more trades. And again, I think that it's definitely coming back up to these previous levels right here. 1 second, let me adjust this. Okay, so we'll continue to say, okay, this will be kind of like our target area, and we'll take it from there. But again, this is working out to be a beautiful trade. Risk is off, so now you're just managing the trade. Now you don't want to put your stop so tight that it's so tight that you might as well just take the position off. So that's why I make sure to try to provide some type of levels. But this 46, 47 level actually looks really, really good. Um, to hide your stop behind it. Probably a little bit lower, but just hide your stop behind that. Gold has been really annoying over the past couple of weeks, and I think it's going to go. I took the long here, went break even, got stopped out. Now I wanted to come back into this level, which would be around this 1300 level, 1287 and a half area. That'll be good, lining up with 200-day moving average support plus previous highs that you could see from here. So you had your breakout. We don't trade those, and that's the reason why, because there's still people, and I'll give you the example now. There's still people here that took it at like 1350, and they don't know what to do. Again, if you're in an option, that's even worse because you've been having about 6 weeks worth of theta decay. If you took the future, it's still bad because again, you're trying to hide your stop below these lows, and it's just going to get stopped out and popped up, and you're going to say the market is rigged. It's not rigged. You just got to wait. Just have to wait. If you miss a trade, so be it. Enough of that. So again, looking at some beta names. Again, you had, and a lot of people thought I was crazy to say, listen, this is not the time to be going long. These resistance levels are still playing in very nicely. This is not the time to go long Amazon. The time will come. Okay, the time will come, but now is not the time to be going long Amazon. And I also said this, we really want to be careful with this name because we have what could be looked at as a blow off top coming because you have three really high three trend lines, and they're starting the incline is really getting fast. So again, it just popping down below here, lower high. Got to be really, really careful with this name. But again, it's it played very nicely as far as the fade, and I did put that on last week's newsletter. Say if you want to fade these levels, at least you have your defined stop. Amazon's probably the one that we got to be really careful with because it could be 800, could be a magnet, but it's still far away. Same thing with Google. Google, we said that we have resistance area right here. Again, your defined risk. It got up to 1812, and not that it rolled. I mean, it's not rolled at all. But again, I'm looking at the overall market saying we're due for a pullback on the ES. We got a hell of a move. I mean, 7 weeks up, really no movement. And, we see the volumes tapering off. So we want to see if they're going to break back below. I mean, they broke to 800, but that's not a big deal because it wasn't that far from it anyway. But going into deeper into the 775, 750 area will get a lot of the breakout traders shaken out. So let's look and see how this one plays out. We have Facebook again. Have this one again. We'll see what happens. Again, it still has this area that it's holding, but I never liked this pattern, and that's the reason why I didn't take it. Is because you just have this, churning and churning and churning. Well, it's not down there yet, but it's still just churning and grinding. There was just better stuff to take. So Tesla has been pain, and if you go on the daily time frame, you can see how painful this has been as far as no movement. But on the weekly, you do have your higher low in place if you can just get a pivot off of it. So you do have your higher low potentially in place, but this is such a sideways look that I'm like, you know what? I want a better pattern because you have higher lows and higher highs, but the trend is still bullish. So you still have a bullish trend here. You still have, for me, I'm just going to do this quick and dirty. You have this area right here. So it's going to break one way or the other. You have to still have the bullish bias, them above the 50% of this range plus the higher low. Just want to see if there's going to be some type of volume here. I would wait until next week, but again, the bull side is what I'm looking at for this name, but it's just, this is annoying me, this whole thing. So again, I'll be putting out this newsletter this week. Also, guys, just want to let you know I do chart requests. So if you're new, like if you have a chart that you're looking at, I'm probably going to do more chart requests, especially during this to kind of help people out. Is if you have a chart or a name that you want to look at, let me know and I'll add it to this, and we'll go from there. So again, it's just to help you have another set of eyes and kind of what's going on and what's the bias, like, and just go from there. So again, have a have a great weekend, and we shall see if we get some moves, man. We want some moves, but I don't want to. Oh, and congrats for those that have not taken any trades over the last 3 to 4 weeks, because it has been annoying. And again, throttling back during chop is maturity versus somebody going from a weekly to daily to 60 to 30 to 15 to 3 to 5 to 1 minute chart, because they're trying to get some action. So I can't get any action on the weekly, so let me go to that's an initial sign to me like, you're in chop, dude. So just understand what you're in, and let the trade come to you. Again, let's take what the market provides versus trying to force our will on it, because it just won't work like that. So again, if you have any chart requests, please feel free to leave a comment below. Like this video. If you know anybody that's looking to get into the markets, please have them subscribe, because again, they have a lot of material to look at. 600 plus videos as of today. So have a great weekend. Take care.